All right. Good morning, everybody. Shogun, I got you. Good morning, Daniel. Good morning, Thala. Shogun, what a great way to start the day. Vittorio, nice to see you in here. Jerry, Ron, Bobby, Alex, Mohammed. Man, it's like a 1950s movie and all the dime store hoods showed up. Guys, it's good to see you. Safia, nice to see you. Um, I love this class. Did anyone lose a day this week, or is it just me? I woke up this morning absolutely convinced that it was Thursday. um, your NT8 is down, operating 7 only. That's all right, Gary. Go with that 7. Good morning, Adam. Um, I do want to join. I'm kind of a jet, you know. When you're a jet for life. Always feel it's Friday. I like that, Thala. Guys, I woke up this morning and I was like, man, Thursday already. Um, and then I looked at my calendar this morning and I was like, hey, wow, everybody's a day behind me. Um, and I knew that it was Wednesday this morning. And this is for you, Shogun. Every morning when I'm loading charts, every morning when I'm getting ready to go for the day, the first thing I do is I go to forexfactory.com. And I check the news and I just look and I say, hey, what's going on today? What sort of news releases are happening? And I'll tell you, I'm going to take a picture of my picture. So there's 3 types of news that we see. There is low impact, yellow boxes. You're retired, every day is Saturday. Nice. Bobby, I don't know if I'm ready for that. I don't know if I could handle that. I dropped one job when we moved to the Pacific Northwest, and I'll tell you what, there's too many hours in the day. Safia, because I am running NinjaTrader 8 this morning. Are you on 8? You are on 8. Cool. So when you downloaded everything, did you download the ZZ work files with the synthetics? Because if you don't have synthetics on yours, then we're going to look different. So I'm running the, I'm trying to see if that'll go to the room. I am running the synthetics. I'm running the full tilt boogie, everything going. And I went through this start to finish. And I made sure that I had everything done and good. Tech downloaded it. When did he download it, Safia? When did you guys do that? Yesterday? Let me pull up your picture again. And don't sad face yet. Don't. It's too soon to sad face, Safia. You don't have the synthetics? Well, yeah, you do. You've got one right there. You've got 33. We've got the same ones there. And then I've got the synthetics on my 5.1. It doesn't look like you do. So I want you to try this. I want you to right click and go to data series. Make sure that tick replay is checked. Because if tick replay isn't checked, it's not going to bring those synthetics over. And if it doesn't bring those synthetics over, we're not going to line up. And I see John Novak jumping in the room. One thing that we're going to do today, guys, you should open the workspaces that use them. That's simple for you to say, John, but not everybody's a tech guru. I got my tech help from John this morning too. And John did pre-make workspaces, and that's what I used this morning. That's what I opened. And I'm trying to just go ahead and pull mine from the downloads real quick. Put those in the room for you. There's a zip file with the brand new ones. Whoops. You can save those to your workspaces file. That's okay. Ooh, did it not go in the room? I thought I just put it in the room. Cameron, you're a speaker. Here we go, guys. Looks like we're taking a tech lesson this morning. A lot of typing going on. So Shogun, are you with me? Let's talk news. Every morning I go to, awesome. I go to forexfactory.com. And it's not so much. All right, guys, do me a favor. Let's keep Jason busy this morning with tech. I'm going to talk about reading indicators this morning. Unfortunately, I can't fix your computer from where I sit, but we do have Jason to take a look and see what's going on. Guys, anytime you switch to something else, there's a teething problem. If you go out and buy a brand new car, you're going to have to figure out how to pop the trunk, right? If you buy a brand new house, you're going to have to figure out where all the shelves are. If you get a brand new girlfriend, you're going to have to figure out whether she likes flowers or candy. So embrace it. Embrace the ability that technology keeps moving forward, and then we have an opportunity to use it, right? And Ron, I agree with John. It's really not trouble once you get it. It takes a minute, but once you get there, guys, I'm ecstatic with my 8. And I think that it's a great move forward. And I think, like anything, good stuff is worth the effort. All right. I'm going to hop off the digression here. We're going to talk about news. So when I open up forexfactory.com, there's 3 types of news. There is a low impact, these yellow boxes. These may move the market, but in most cases, they're not creating erratic spikes. There's the medium impacts. These can. Ron, go yell at someone to get off your lawn real quick, and then we'll see you in class after I talk about news. From the whippersnappers. Medium impact. I love this room. It's like hanging out with all your cousins. Everybody's talking trash. Medium impact news. Shogun, it may move the market, right? It doesn't matter what it says, but the market may jump. There's a medium impact there. And then these high impact newses that you're going to see at 8:30 a.m. tomorrow morning. These are the ones that can make that market spike, jump, run for 50 points in crazy directions. And the key here is, Shogun, is that I'm not trading what the news is. At 10 a.m., I don't care what the pending home sales are. I don't care what the number is. I don't care whether it's up. I don't care whether it's down. The only thing that I'm concerned about is that with a medium impact indication next to it, is it may move the market. It may make it erratic. If I'm in a trade, it might spike and slip. Does that help a little bit, Shogun? I check the news. And when I check the news, I typically write a note down or set an alarm with Siri that says, hey, there's medium impact news at 10 a.m. I'm going to go toast a bagel. I'm going to walk the dog. I'm going to go high-five my wife and do something that just keeps me out of the way. And this is part of my morning routine. Every morning, this is what I do. I come in. I do personally. You'll make a decision on how you feel about it. I prefer to stay out of the way of news. It's like you wouldn't stand in the middle of a herd of cattle if they were about to stampede, right? Because you don't know which way they're going to stampede. That's kind of how I feel about news. So I'm just aware, and I go through my filters. And I'm only looking at U.S. markets. I'm looking for everything, right? I'm looking for these high, medium, and low because I want to know where they're happening. Guys, it doesn't matter to me that good trade balance was down. It doesn't matter to me that the HPI was up or that consumer confidence was up. It has nothing to do with it. Do you like that, Thala? I've never used the stampede analogy before. Same thing, Shogun. So today is Wednesday. Today at 10:30 a.m. we have crude oil inventories. And even though this is a low impact news, if you're a crude trader, well, that could have a pretty good impact on you, right? When they release those numbers, somebody may have like a holy smokes moment. So if I'm trading crude oil, there's no reason for me to be in the market at 10:30 unless you're just that adventurous type. But that's up to you. You'll decide whether or not that's what you want to do. Cool? So save that link and just make that part of your routine, guys. Every morning I go through, I don't know, I've never looked at a natural gas chart in my life. Yeah, and if you're up 20 ticks, you don't mind giving it up, Gamble. Guys, so every morning I go through my computer maintenance, right? When I'm done with computer maintenance, I go to my Forex factory and I check my news. And then I'm sure you guys do this too, right? After you check the news and those charts are loading, you guys are opening up your spreadsheet and you're going to that trade tracking sheet and you're saying to yourself, this is what I did yesterday, this worked. This is what I did yesterday, this doesn't work. These are the trades that I got feedback on. And then maybe just for a refresher every morning, guys, I'm going to look for the best of the best trades today. I'm going to give myself the best chance of success. So I'm going to take a look at a couple of these high probability trend trade setups, and I'm going to focus my day on matching what's going on here. If you're brand new, you're in your first 20, 30 days, your first week, you're focusing on entries, right? You're going to that resource page, to the education page, opening up the tutorial section, and you're focusing on that high probability trend trade that happens after a termination condition on the 13-2. Guys, this is your first 20 days. 20 trading days. I say 30 days and people are like, oh my gosh, that's a month. 20 trading days. Hey, Vittorio, you're probably going to get better and more thorough responses over here in Traders Chat. Just because, since this is the education room and I know squat about tech, if you bring it over to the Traders Chat where you have all those veterans that have been using it, you might get better answers quick. And then, of course, Jason and Tech could help as well. And guys, I apologize. I'll apologize in advance. I'm not a tech guy. My skill set comes in teaching you guys to read the indicators, and that's where I excel. And honestly, that's kind of where my pay grade ends. I've got John Novak for the tech. I've got Jason for the tech. John's a programmer, the code writer. Man, I teach you guys how to recognize pretty lines and how to take advantage of them. And that's what we're going to do today. And Victoria, I'm sorry, I know that's not as helpful as you needed it to be, but I think that the Traders Chat section, yeah, it's okay. I'm kind of booting both of you guys there on the sly so that we can focus a little more on the education process and not distract so much with the tech questions. Don't ever be sorry, though. It's okay. Sometimes I just redirect you guys, and it's totally cool. So we're going to focus on the first 30 days, guys. I want you to just think entries. All I'm going to do is look for entries. And you're going to look for entries on a high probability trend trade. Why a high probability trend trade? Well, Jar Jar, you're here. You are in the right room. This is the education room. We're going to talk about education. This is right where you need to be. As if you'll allow things to be simple, if you'll focus on this high probability trend trade for the first 20 days, this is a trade. Good morning, Doc Luck. I almost said Duck Luck, and I don't think that's right. Every indicator on every chart is going to agree for this trade, guys. Your triggers are going to be the strongest. There's going to be no termination conditions. There's going to be nothing between you and your target. This is your first 30 days, those consistent winning trades. That trade that has been proven that it wins more than it loses. It's been back tested over the years by us, by users. This is a trade that gives you an advantage. But what it really does for you is focusing on, for that first couple weeks, the absolute best of the best. It's going to teach you to read your charts, guys. And that's exactly what this class is designed to do. Which page are you looking for? The one that I'm on? Love it. No worries. So everything for me and everything that I talk about, welcome to the room, by the way. Everything that I talk about comes from the education page. And when you go to the education page, right now I'm in the tutorial section. And the tutorial section is going to cover all of your rules. It's going to talk about entries, exits, management. It's going to talk about your actual indicators, what you're looking at, get you that live access, everything that you need, Duck Luck, is going to be on that education page. Everything that I talk about comes from the education page. There really are no secrets with what I do. And then everything that you can find on the education page, well, you can also find in, excuse me, I can't remember the name, in Discord, pardon me. All the trigger reading that we talk about, there's sections dedicated to it. There's a self-training section for the brand new users. Where do I start if I'm on day one? Well, go to the self-training, run through it, follow the links, and then show up. And then Duck Luck also, from the user guides, this will take you directly to the pages where I am. So two resources, two places to get it, either in Discord or straight from the education page. The high probability trend trade, and especially if you're brand new, guys, I want you to remember you're becoming a chart reader, not a day trader. Your chart reading is the process that gets you into trades. 90% of what you do is going to be chart reading. 10% of what you do is going to be taking the advantages that that reading provides and looking for the best of the best entries to get you into the market. And your chart reading is going to incorporate a couple elements. It's going to have you recognizing where the market is likely to continue, and you can use that continuation point for a high probability trend trade entry. It has you understanding where the market is likely to go, and this is where you're going to learn how to manage your trades, how to get in and be able to use Fibonacci, be able to use momentum to determine when it's appropriate to get out. And it's going to have you understanding almost instantly where the market is likely to stop through the use of termination conditions, knowing when that trend is likely to end, when it has the potential to end, so that you can keep yourself safe from trading into these areas that may stop the market. So it's these three simple elements that come together in a high probability trend trade. And guys, I say it all the time, we're going to keep it simple. You're going to keep it simple initially. If you're an engineer, you don't need to build a spreadsheet. If you're a daydreamer like me, don't get caught up on the colors. Let's keep it as simple as possible. It's going to be three rules. Your first rule is that you have to have strong trigger lines, the advantage of momentum. Each rule provides an advantage for your trade. Rule number 2 says termination conditions are false, and this is going to provide you a clear path. And then rule number 3 says that you're going to use a limit order at the areas and the triggers, and this is going to provide you an entry area where the market is likely to continue. Guys, these three rules come about on only 2 charts. You will see people posting pictures of more charts in this room. For the sake of learning to read your indicators, focusing on the best of the best, creating those advantages for yourself, you're going to keep it on only 2 charts. And your eyes will always start on the 13.2 chart. The 13.2 chart is a broad stroke of a brush. You're painting the side of a barn here. And you're understanding with just a glance at the most current bar, the trend of the market. If the background on your 13.2 is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your 13.2 is red, you're in a downtrend. You should only be looking for high probability trend trade short. Guys, just sticking with the trend initially is going to keep you on the right side of things more often than not. And then we're going to look for rules 1 and 2 on the 13.2. Rule number 1 says strong triggers so that we can have the advantage of momentum. And rule number 2 says no termination conditions, making sure that we have a clear path. When this broad stroke of a brush tells us that it's okay to look for a trade when these rules are met, that's when you turn your eyes to the 5-1, guys. And this is your entry chart. Write it down. If you're a note taker, just write that down. The 5-1 is an entry chart. You're going to refine your broad stroke of a brush provided by the 13.2. And this is where you're going to locate that area where the market is likely to continue. And rule number 3 is going to get you into that market. And you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. But by using the smaller, faster chart to refine the 13.2, what it does for you is it allows you to reduce your risk and maximize your profit potential. On your 13.2, 1 bar is going to define momentum. 1 bar is going to define the trend. 1 bar is going to let you know if there is something in your way. And what happens in this 1 bar on the 13.2 may be 15 to 30 bars on a smaller, faster chart. This is how we're able to refine all the way back using areas inside of favorable large triggers to find an entry for continuation of the trend. So let it be simple, right? Don't overcomplicate a process that doesn't need to be difficult. Guys, you're going to recognize these rules being met probably in the first 2 or 3 days. The first day, you're going to be figuring out how they all work together. The second day, momentum is going to be easy. Termination conditions are really a simple recipe. You'll take a day or 2 to figure out those entries, guys, and then it's off to the races. What you've done is you've provided yourself a platform, something that you can use to take a trade that wins more than it loses. And then when you understand how to read your charts, guys, this is where that chart reading takes you to the next level. And you're going to start recognizing medium probability trades. And medium probability trades are the second things that we talk about. They're the ones that are when most indicators line up for a trade, however a small issue exists. A small issue is singular, guys. We're always looking to have the advantages going into trades. This will be the vast majority of your trades, and when you execute these trades, you're going to take them and manage them assertively. Your ability to read charts will allow you to manage them assertively. If there's trouble in your way, you may take a portion of your position off at the trouble spot, reduce risk to a 0 loss level. Your chart reading is going to take you to that medium probability trade. That high probability trade, learning how to read your charts, is going to give you the skill set to do that. And guys, every trade starts with rule number 1. What a great place to start, right? The first rule says that I must have strong trigger lines. This is going to provide me the advantage of momentum. So in an uptrend, when the background on my 13.2 is green, my small triggers are above the large triggers. The large triggers are widening. They're angled in the direction of the trend. Guys, this is my best of the best look. This strong trigger look lets me know that the odds are favorable for the market to continue up. New users, you're going to hear that a lot from me. You're going to be typing that on your charts. Odds favorable momentum. In a downtrend, when the background is red, the small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. The space created between small and large lets me know that the odds are favorable for the market to continue up. This is visually the look of rule number 1 being met, that advantage of momentum. And if you commit to this strength, to this power in the market, pushing it in the direction of the trend, typically it's going to help move you to that next key area. But as those small trigger lines break inside of the large trigger lines, we call this a weakening of the large triggers. This weakening of the large triggers tells me that anything can happen up or down. We've given away the advantage of momentum, and we've turned it into a bit of a coin toss. So as you look at your charts, you'll be searching for high probability trend trades from the point where the smalls accelerate until they return. And you'll notice these tails or these wicks on a 13.2. Each of these circles with odds favorable momentum is a potential entry on the 5-1. You'll notice that there's only those circles with that odds favorable momentum. Guys, this is your best of the best spot. So if you're brand new with me, if you're trying to get this method down a little bit, you're focusing on that simplicity, do me a favor. Give me a Y in the room and let me know that you're comfortable with this concept. These strong trigger lines are going to give you that odds favorable momentum. And guys, I can't tell you how many times I see brand new users trading weak triggers, wondering why it didn't go to the next spot. Focus on the best of the best. And you'll find that it's very easy to recognize when you open up a chart. Guys, this is my 13.2. There's a strong trending market. That happened overnight. Absolutely, Duck. The large triggers are the dashed. The small triggers are not. Yeah, they went way up, didn't they? And then you're going to look for, watch this, I'll pull out a drawing tool. Small's above the large are wide, the space between. There's one of those tails, one of those potential entries. And that's what we're going to be waiting for. So as we look at the market now, the smalls are still inside of the large. We don't have that odds favorable momentum yet. I can identify at a moment. My background is green. I should only be looking for longs. I'm waiting for that odds favorable momentum. And if I get it, I'm going to make sure that I have a clear path. And that clear path means that there's no termination conditions in the way. So when we go back to that simple recipe, what is a trade? A trade is momentum. Rule number one, guys, that's the easiest one to recognize. A trade is a clear path. And this means that there's no termination conditions present, right? This means that there's absolutely nothing between you and your target. And a termination condition is defined as a Fibonacci-based indicator that may reverse the market. And that word may is a very key word here. We'll use our trigger lines to help us determine whether or not it may. Those areas that may terminate a trend can be a divergence high. This magenta line that forms from a pivot when there has been a loss of momentum. It can be red resistance, the red lines that run across your chart. It can be these yellow 1-to-1s. These actually print in the moment. These are like fibs that happen throughout the day. It can also be blue support, or it can be this divergence low, the cyan line, coming from a pivot that lets me know that there was a loss of momentum. Guys, these are the areas that may reverse the market, and you're able to recognize a termination condition with a little bit of trigger reading. The same way that you read your trigger lines to determine whether or not you had momentum, you'll be able to read your trigger lines to determine whether or not an area has the potential to break or to hold. Two-part recipe. Price reaches an area. We're starting on the left side of the picture here. Price bars come up and they run smack dab into resistance. Well, when price reaches resistance, the only thing you have to ask yourself is where are the trigger lines? If they all remain below the area of resistance, this area of resistance may reverse the market. No more long trades until the area breaks, until once again I have that clear path. If you come over here, the area is broken when both the small and the large triggers make it through the area. So no triggers through, it's not broken, no clear path. Small and large are through, the area is broken, you now have a clear path. Can you give me a Y in the room? Seems pretty simple, right? Price reaches an area. If the trigger lines don't break, guys, you don't have a clear path. It may reverse the market, it may create a large bounce, but what you've done is you have willingly forfeited your advantage of a clear path should you decide to take the trade. And that's on you, right? Whether or not you're going to do it. Guys, there's one other one here in the middle. When the smalls break above an area or below an area, and that odds favorable momentum is present. This is an area at 69.80 that has the potential to break. It has the potential to break because your small triggers are above it, because you have odds favorable momentum, but it hasn't broken yet. Guys, this is still not a clear path. This is what we call a 50-50 trade. Why is it a 50-50 trade? It has nothing to do with the odds of you winning. I'm going to write on it real quick. A 50-50 does nothing more than reference where the triggers are. 50% of them are above, 50% are below. So what you run into, and this is going to happen all through the day, price reaches an area, absolutely no trigger lines go through. Guys, just don't take the trade into the area initially. Give yourself the advantage of a clear path. When both the small and large have broken above the area, that clear path is present. And when you have this 50-50 look, pause for a second. And if you're going to look for an entry on a 50-50, if you're going to trade that potential, let it be perfect on your 5-1. And guys, we're going to talk about the perfect entry on the 5-1. Areas with the potential to break create a medium probability trade. You're going to be able to manage these assertively, guys. These aren't off the table, but in the very beginning, you either have a clear path or you do not. So I'm going to go back to the live market real quick and let's just see what they're doing. Price has reached an area of resistance. Those small trigger lines haven't made it through just yet. They're trying to, they're threatening to, but in the moment, both lines of my small triggers have not gone north of 40.44. Does everybody see this? This is what we call a termination condition. So what we have to do is we have to wait for that area to break before we look for a trade. Whoops, I thought I was going to jump straight over to the other one. Sorry, I'm going to let my crude oil, I thought I had it open. I didn't. We're going to look at a couple terminations. Price reaches resistance, absolutely no trigger lines break through. No long trades. Price pulls all the way back to support, absolutely no trigger lines break through. No short trades. 90% of what you guys do during the day is simply going to be reading your indicators, waiting for those advantages, waiting for momentum, waiting for a clear path. And these rules are lined out the way they are. We discover momentum first, right? We want to be in with the trend. We want to have those strong triggers, that advantage of momentum. And even with odds favorable momentum, price smacks right into these one-to-ones. Guys, you knew exactly where the market was likely to go because of Fibonacci. And now that you've reached it, there's absolutely no trigger lines through. It keeps you from taking that short, from getting excited, hoping that the market does something that it says it isn't going to do. It creates a bounce, ultimately. Would have taken you right out of a trade. And then it reverses the market. Anytime you say, hey, that market reversed, it's gone from red to green. The large triggers have gone from red to green. Guys, any full reversal that comes from a termination condition, we call that a strong top or a strong bottom. A termination condition that creates a full reversal is a strong top or bottom. Well, when this reversal gives you odds favorable momentum, when that odds favorable momentum has a clear path, there's one of those tails, there's one of those circles. Guys, this is your absolute best of the best. This is that first 20 days looking for that amazing trend trade that typically wins 70 to 80% of the time. Is everybody comfortable with that? Termination conditions. Remember, on the 13.2 chart, right? We're looking for the 13.2 to let us know whether or not we have a clear path. Awesome. Guys, sometimes you have a clear path. Sometimes you have odds favorable momentum and a clear path. I'm going to give you one more termination condition, but this one doesn't involve areas. This one involves losses of momentum. Every time you have a pivot, the market goes from down to up or up to down. If a negative number prints below, if a cyan divergence low line prints from the bottom or magenta from the top, I know that there's been a loss of momentum in the market. 3 divergences in the same price range may terminate the trend. So if 3 divergences print on my smaller, faster chart, I'm no longer looking for that potential short. I'm no longer looking for that potential long. It becomes very powerful when the small trigger lines work their way inside of the large trigger lines. Do you guys remember the trigger line lesson? Odds favorable? Odds favorable is great strong triggers, whether it's a 5-1 or whether it's a 13-2 or a 21 or a 34. So we go from odds favorable to anything can happen, taking away that advantage of momentum one more time. And then when that third pivot is higher than the previous, or that third pivot is lower than the previous from a high, now we have that head and shoulders pattern. Now this becomes even more powerful. You'll recognize this one on your 5-1 chart, guys. This is the only termination condition that you're going to recognize on that 5-1 chart. One blue line on your 5-1 is not a termination condition. It's an awesome opportunity to bounce back to maybe a potential entry. 3 divergences on the 5-1 may terminate the trend. So guys, give me a Y in the room. We good on termination conditions? We have the advantage of momentum, right? We have, here's our crude chart. We can identify odds favorable pretty easily, right? Then price gets to a divergence high, the trigger lines can't break. Look how it reacts. And then it pulls back to resistance. That red line makes it bounce all the way down to support. What you're witnessing here is consolidation. Termination condition at the top, termination condition at the bottom, and then it starts to push up a little bit. Yeah, it was a snooze fest for sure. So guys, what you can do is you can go through, and every time you see odds favorable momentum, and you see one of these circles, let's see if we can get over here to 6:54 a.m. You're going to be able to recognize how to catch that continuation of the trend. You're going to be able to recognize how to use that momentum. And we're going to talk about entries right now, guys. We're going to talk about being able to turn this broad stroke of the brush, refine it, and bring it back. Good morning, 10K. 10K, your best bet is going to be going over to the traders chat section. There are an awful lot of people over there that are using it. I don't use the copier myself, but if you head over to the trade chat, you can, maybe a search function. But yeah, just throw it out there. Hey guys, who's using copier? What could you do? Oh, and here comes John. John Novak with the FYI. Each of those requires tick replay to be enabled to see the synthetics or market flow. Thank you, John. Guys, as we work through the addition of NinjaTrader 8 every now and then, John Novak has been working diligently to make it as smooth as possible. Just know that there's a lot of great information. Let me give you guys the link too. I've actually got it bookmarked on my page. This is the one to help keep Ninja 8 from crashing, and so far it's working great for me, guys. I don't have a supercomputer, but I'm teaching today's class on 8 using this information, and so far we're running amazing. So fingers crossed, knock on wood, we're going to keep doing that. All right, let's get back to the tutorial section. We have the advantage of momentum, right? We have the advantage of a clear path. So let's enter a trade. Let's figure out how to pinpoint with amazing accuracy where that market is likely to continue. And then we're going to use a limit order. Well, we're not. You are. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And 10K, there is your apex. John, I sent him over to Traders Chat for that, so he may not be here to hear you. He's probably over in Traders Chat asking the same question. As when your rules are met on the 13-2, when you have odds favorable, when there's nothing in the way, this will be the look on your 5-1 chart. The 13-2 is in an uptrend. The 13-2 has strong triggers. The 13.2 says it's time to look for an entry. You're going to focus your attention on the 5-1 large triggers. And if they are up and strong, you're going to look for the areas that fall inside of them. Rule number 3 says use a limit order, which means that you're actually going to wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback. And a pullback is a small retracement in price counter to the underlying trend. We're relying on that large crowd mentality to give us momentum. We're relying on that clear path coming from the large crowd. There's always a group of yahoos, right, that want to buck the system. Guys, they're going to fight against everything and try and push the market down when it's going up. They're going to try to push the market up when it's going down. Guys, we rely on those yahoos to create a window of opportunity. Gary, a simplified checklist for what? I love making checklists. What do you need a checklist for? I just gave you the link with pictures. This whole process took me about 3 minutes this morning. Ta-da! Checklists are good, but pictures for those of us that are a little computer not so savvy, that's an awesome one. It's very easy to follow. If we're going to buy a pullback, guys, a pullback starts with a reversal bar. When everything says up, we're going to wait for a bar that says down. And when we get the reversal bar, it's time to create our window of opportunity, that area where the market is likely to continue. For a long trade, the window of opportunity will extend from your highest point of support to your lowest point of support inside of favorable large triggers. For a short trade, it's going to extend from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. As I use that phrase, favorable large triggers, meaning that both your large triggers, the smooth dashed lines, and your synthetic triggers, those stepped 90-degree angle lines, when they trend one on top of the other, overlapping, this creates your best of the best look. This is the most advantageous. This is the one that's going to give you the absolute smallest window of opportunity. So when this reversal bar happens, I'm going to recognize one-to-ones, fibs and mid-bands. These are the areas trades will come from. And inside of favorable large triggers, as they're coming up strong, I'm going to right-click and activate a limit order right at the top of my window. Because of the momentum on the 13.2, I'm not trying to catch it at the bottom of the window. I'm not worried about a couple ticks. I'm going to enter this market when price reaches 79.21. It's going to hit my order. It's going to fill it. I'm going to be in that market in a long position with the anticipation of the market continuing up with that overall trend. I have the advantage of momentum. I have the advantage of no termination conditions, and I have the advantage of having entered at the area where the market is most likely to continue. Guys, I'll take this trade 1,000 out of 1,000 times because typically 70 to 80%, this is my results. Profit target reached. Utilizing Fibonacci to recognize where the market is likely to go. Because I wait for the pullback, I'm reducing risk behind a reversal bar. I've seen Nexgen users take beautiful trend trades with as little as 2 to 3 ticks of risk because of the pullback, because of using these areas. Because of the pullback, I've got a longer distance to my profit target. I can maximize my profit potential. So guys, give me a Y if you're with me here, and I'm going to show one more picture using kind of both charts together. When I have odds favorable momentum on the 13.2 and everything is strong, when there's nothing in the way, when I haven't reached those areas, and guys, I love this picture because it illustrates how that pullback creates an advantage. And this is the actual market. The top of my 13.2 bar is the beginning of the pullback. Does that, this one bar on the 13.2, stretch that out, is this on the 5.1. So you can actually see that refinement process. Even though price is a couple ticks away from resistance in 1-to-1s, because you're going to wait for the pullback, look at how much distance you have to the potential profit. So when the rules are met on the 13.2 and you circle one of these tails, and that tail lines up with an area of support or resistance inside of favorable large triggers, guys, you know without question that you have a high probability trend trade. You know that you have the advantage of momentum. You know you have the advantage of no terminations. And you know you have the advantage of an area where the market is likely to continue. So once again, I'd like to remind you guys, if you focus on this for 20 days, right? If you focus on just this simple look, what you're going to do is you're going to find yourself being able to recognize odds favorable momentum in the moment. You're going to be able to recognize termination conditions almost instantly. And ultimately, you're going to be able to find that best of the best entry that reduces risk, that maximizes profit potential. Guys, I always tell my new students, great entries create manageable trades. Focus on your entries for 20 days. Give me 20 days looking for nothing but the absolute best entries to get you into the market. I'm going to give you a couple presents right now, guys. I'm going to give you nope. Thala, today we're waiting, right? Today we're being patient. Today we're waiting for the best of the best. And it happens sometimes, doesn't it? And this is why you develop trust in your rules, Thala. And I'm glad that you said that. Because what happens is when you start using this checklist for every trade you take in the beginning, you know that you have advantages, right? You know that I've got the strongest triggers, the clearest path, and the best spot for entry. And what it does is it keeps you out of a lot of nonsense like this, doesn't it? It keeps you out of trading into areas that are going to create bounces. It keeps you from fighting 3 divergences. Successful traders are the most bored group of people you'll ever meet in your life, guys. But what happens is eventually everything lines up. And when everything lines up, I'm going to show you a trade I took yesterday. This is from the afternoon yesterday. And everyone's like, oh, they're just teaching us silly stuff. Guys, I trade the exact same plan that I teach. Strong triggers, no terminations. Look at this pullback right to the area of support inside of favorable large triggers. I got in a tick or two above the mid band and want to make sure I didn't miss it. And it just launched. Guys, my trading plan is exactly what I teach in this room. Waiting for these advantages, waiting for the best of the best looks. I use a checklist just like you guys do. Guys, I have a checklist printed out on my desktop. What's it going to take to get me into a trade? And to be honest with you, it's my entries that create manageable trades. It's my ability to recognize the advantages to get in at the correct spot. Alex, we had 2 areas in that picture. My window of opportunity extended from this Fibonacci support down to this midband. Guys, remember what I said when you learn how to read your indicators? You're just going to move on, right? You're going to keep moving in the direction. Alex, I use another chart or two that told me that this was my best spot, somewhere right in between those areas, which is why I got in a little bit below support. But if I had gotten in at support, my stop still would have gone where the market shouldn't. Outside of those large triggers, I still would have stayed in the trade, and it would have worked out just fine. Yep. Guys, all I'm doing is I'm giving you a foundation right now. I'm giving you a plan as a brand new user. Here it is. To personalize it, my trade is the high probability trend trade. In order to enter this trade, I must have the conditions of this checklist met. You have the checklist. You have the conditions. And guys, now I just want you to start snapping pictures all day. Take pictures every time the rules are met. Every time someone posts in the room that the rules are met, steal their picture, put it in your spreadsheet. But put a couple of them in your plan so that you can quick click and take a look. What does my best entry look like? Let's click the link in my plan. It looks like strong triggers. It looks like no termination conditions, and holy smokes, it looks like an entry in an area inside of favorable large triggers. Guys, that's my absolute best of the best trade. It won't be your only trade after about a month. You'll probably work into those medium probability trades. But if you focus on the best of the best, guys, you're going to be reading indicators like a champ. And once you can do that, the world is your oyster. Once I identify my entries, guys, I have to define a management plan. This is, hands down, the most mechanical plan you're ever going to see. I will trade 2 contracts. My initial stop will be 12 ticks. It'll be adjusted below or above the window of opportunity initially. Guys, there's no room for opinion there. It is exactly what it is. It'll be moved 2 ticks above or below the reversal bar in the direction of my trade. No hope, no fear, no anxiety, just a mechanical, pragmatic approach to stop placement. I'll take profits on my first contract at 100, move my stop to break even. My second target will be 200. Management is the second bite of this elephant that you're eating, guys. Entries are the first, and this is why I stress to people. Focus on your entries for 20 days. Focus on getting in at the right spot. It becomes easy to manage these. Here's your first one. Keep it mechanical. A lot of you are going to take $100 trades and a break even on the second, but let me remind you, if you do that 3 times in a day, it's a $300 day. It's a $1,500 week. Guys, do you realize that only $300 a day is a $6,000 month? That's an extra $72,000 a year. Taking 3 perfect trades that only hit the first target. It's not about taking more trades, it's about taking the best trades. And if you allow this to be your path for the first 20 days, you're going to understand how to read your charts and understand fluently where the market is likely to continue, likely to stop, and likely to go. And guys, the idea is to build a foundation capable of winning constantly as you expand your knowledge base through repetition. If you want to focus on the best of the best, guys, here's my spreadsheet. Take it. I steal pictures from you guys every day. I have, let me do the math, 142. I stink at math. 142 pictures of high probability trend trade entries. 142 pictures of those medium probability, those 50-50 trade entries. I've got a section on management because every great entry provides an opportunity for management. I have that mechanical management beginner plan in pictures for you. Guys, you have chart reading things, talking about 50-50s with divergence, split triggers. What does split triggers look like? Best of the best look, right? Trigger lines one on top of the other. You guys remember this picture? That's perfect. When those triggers are split, it creates problems. These are the things that I put into my spreadsheet every day, guys. Chart reading things, things that I recognize, patterns that I recognize, termination conditions, identifying where the market is likely to stop. So now you have a copy of my checklist, of my spreadsheet. You can go through and look at everything here, but guys, your job is every time you take a trade, make sure that you are posting it in the room. Make sure that you're putting into the spreadsheet and study it a little bit before the morning, guys. Here's your path to success. And this is our first hour, guys. We're almost through the first hour. That went quick, didn't it? Your step-by-step process to becoming a confident trader ASAP revolves around posting your trades in class. So all my new folks that are in here, Thala, I know you can post. You're posting those pictures. Thank you for that. Doc Luck, open up that capture software. Make sure you can post a picture. If you can't get a picture to this classroom, let me know. I'll get you there today. Jar Jar Binks. You need to be able to post a picture, right? Who else is new in here? Who else is on a demo? Shogun. Make sure you show me a picture. Guys, when you downloaded the software, it put capture software on your computer. If you don't have it, let me know. I'll get you the link right now. It's 100% free, and it takes 2 minutes to download. Paul, you know it's a slow market when you're wondering if it's even moved. So it went straight up overnight. That is today's movement, Paul. Even more so since the market opened. Let me get that back to 8:30, 9:30. There you go. That's all it's moved today. Some days are better than others, right? If you took the first shot at the 50-50, I'm not sure. I'm not sure why. It just is what it is. Did anybody catch this one? Smalls through the area, large or not. Pull back to support inside of favorable large triggers. There's one of those medium probability trades, guys. This was your last-ditch effort to get up. And now things are changing. All right, guys, I know that there was a lot of talking on that first hour. Post your charts. Use your spreadsheet. Guys, ask for help over and over. Uh-oh, Sophia. To minimize your learning curve, post pictures of your trades in class every day, guys. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory. Long-term failure. I'm going to give you this sheet in the room as well. How will you know the difference? Well, that's where we come in. You need feedback. We're here to help. If you place a trade on the simulator, you participate in class, there is no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, and this really is the educational magic. So if you're brand new with me, if you're on a demo, not only are you looking at the software and understanding what we're doing here, but you're also getting the opportunity to see how we teach, to see the feedback. Every time you post a picture in the room, Thala, you actually post the first picture. Thala says, I have smalls below the large, I have the large wide, I'm coming from a termination condition, and there was a pullback to an area of resistance right there at the large triggers. Thala, I agree with you 100%. That does seem to be a good entry for a short, doesn't it? The only thing, Thala, that I would love to see is, guys, don't forget, tell me why you're doing what you're doing. Let me give you a copy of this picture. Tell me why you got in. So, Thala, don't just tell me that it seems to be a good entry, right? Reinforce those rules in your brain. It seems to be a good entry because I had strong trigger lines. It seems to be a good entry because I had no termination conditions, because I had an area inside of favorable large triggers. The more you write your rules on your charts, guys, the easier it becomes to recognize them. The easier it becomes to police yourself. And if I know what you're looking for, well, then I get to hold you accountable for what you're doing. And that little bit of accountability goes a long way as you guys begin to move forward. David L., good to see you posting pictures in here. Let's see what we have. See if we can get that thing to open up. There we go. David L., just a little early. Just a little bit early. You had the 3 divergences. Things rolled over. I can't see your entry. Your entry was at 74.02, which would have been maybe right there. The only challenge this one had, David L., is it just needed those trigger lines to clear the 1-to-1s. Just wanted to see those trigger lines break through, and then once they do, then all of your charts agree and that path clears up a lot to get down to that trouble spot. Does that make sense, David? This is a perfect read. Termination creates a full reversal. They just wanted to mess around a little bit. I love your stop placement too. You put your stop where the market shouldn't go. And then, David, as you see this look over and over, and you'll probably take another shot at it right here because it's already done its dancing. Everything ends up agreeing, and then it works its way down. Does that make sense? I think you took a good first shot with that termination condition. I think somebody with deeper pockets than you wanted to try to push it up one more time. Stop placement was great. There's your potential re-entry to get it back. Does that make sense? It's a great read. You guys, there's that phenomenon again. 1, 2, 3 divergences, and this is on a higher time frame. Whoops. Nice job. Guys, this whole sheet that I just gave you walks you through the process of getting where you need to be. That's what we talk about in the room every day, is getting you to the same process. Just waiting for an area to break, right? Guys, this is your S&P. This area has the potential to break, but it hasn't broken yet. You'll notice that we're getting divergences, that the synthetics are up, the large are down. Waiting for that clear path. Whoops. Guys, if you toggle in between your workspaces, three divergences pushed us all the way down to that support. The small triggers broke through, but the large didn't. Guys, this is a medium probability trade. And I'm going to circle it so you can see. And I'll circle, whoops, right about there. This is a 50-50 trade. It's a 50-50 look, and I want you guys to let me know if you see it. The smalls have broken through the area, but the large have not. This is an area with the potential to break, but it hasn't broken yet. And you can see that these areas were a huge fight. Well, this 50-50 trade had an area of resistance inside of favorable large triggers, and it really got run over. And guys, I'm showing you this one because I want you to look at the bigger picture. And this actually shows it twice. You can use Fibonacci and rules. I'm used to my 7. You can use the Fibonacci and rules to determine there we go. We'll use that one. You can see the range, right? From resistance, that pivot stop out to support, to resistance, to support. You can see that the market's caught in a range here. It does the same thing here. Support or resistance to support to resistance to mid-band to resistance to support. Guys, when you identify that both support and resistance are holding, when you see that market winding up and consolidating, does everybody see what I'm talking about? It can't seem to break out of this range, right? These 50-50 trades, that first breakout, guys, these either run like a scalded dog forever or they fail miserably. This is a pretty low medium probability trade, if that makes sense. When you're caught in a range, it's just a fake breakout. It means your sellers pushed as hard as they could. The buyers let them believe they'd pulled one over, and then they unload the guns. And you can see that they did it down here as well. It holds, it holds. The sellers get that little push beyond the areas, and the buyers say, ha, just kidding, we're going to the next key area. I'm not telling you don't take medium probability trades. I'm not telling you don't take 50-50 trades. Nope, there isn't, D. The only thing that you can determine is whether or not you have momentum. And D, if you have momentum, it stands to reason that the run may be longer, yes, if you don't lose that momentum. And if you have that momentum and there's a clear path, do you see how in this trade yesterday, not only did I have strong trigger lines, I had a clear path all the way up to here. So I said, I'll take my quick profits like I usually do. I'll put $100 in the bank. And I said, because of this look, I'm anticipating more movement up. And I think I got 8 points on the second contract. Does that make sense, D? You can use the 13.2 to help you determine where the market is likely to go. And guys, ultimately, this market went up 50 points. My goal is typically 4 on a second contract. I felt pretty good about taking 8 because of all the momentum. Yeah. So in the beginning, you might take pretty conservative entries and exits. But you'll be able to begin to read those trigger lines and determine when it's likely to move up a little more. Look at that momentum all the way up. Whoop, it just booted me out of Discord, guys. Ha, you're worried about NinjaTrader 8 crashing. Discord gets me. I know you can still hear me. So I'm going to get back on stage and I'm going to get back into it. Every great entry has a management plan. Every great entry provides an opportunity to get better and better at your management, guys. If you get in down here, momentum never waned until it got up to this divergence high. Look at the momentum as it comes into resistance here. You could take profits at a Fibonacci resistance, or you may say, because of the momentum, I'll brace for the bounce. And that bounce just gave another entry. Does that make sense, D? Let the 13.2 lead the way. Let that 13.2 tell you. All right, Thala, you have odds favorable momentum. You're coming from a termination condition. You enter at the areas, strength and location of the triggers. Made a quick profit, Thala. And Thala, you're still brand new. And I like that you manage this one assertively. And I'm not going to beat you up for it, but this was a no, wasn't it? Resistance, price reached it, trigger lines remain below. What you did here, Thala, is an absolutely beautiful example of identifying the edges and taking a chunk from the middle up to the edge. I think this is an amazing trade. Guys, this is how you trade when it appears to be range bound. You don't sit and hope for home runs. You took a perfect entry and you took a conservative exit. Thala, you nailed it. Nice job. And then 50-50 to the downside. 2 entries, target hit, tight stops. I like it. Great management. The only thing that was wrong on the checklist, Thala, Tony, nice trade. Remember that 50-50s that don't come from an area, you need that aggressive management, and you nailed it. Thala, the only thing that was wrong was your termination conditions. Price reached an area. Oh, I'm sorry, I got you right now, Paul. Price reaches an area, no trigger lines break through. This is a textbook termination condition. Does that make sense? But because of a great entry and tight management, you're still able to make money. It's a little more advanced trade, but you nailed it. Great job. And guys, there's crude. It did break out of the range. Nope, that's earlier. Follow, do you see how that termination condition is creating the struggle here in the live version? You took a great shot. You took awesome profits. But right now, nothing says 74.12 is likely to break. Not yet. All right, Paul, sorry about that. Let's see what we have. This fib hadn't printed yet, so all the triggers are through resistance. You had a clear path. You have everything. Entry inside the large triggers. Everything's above. Your 13 range is strong. Just a momentum style trade, Paul. Well, and all it is a momentum, isn't it? Everything says up in a strong trending market. You have a clear path. And look how it pulls right back to Fibonacci support. Everything breaks, it taps and goes. Isn't it a pullback to support inside of favorable large triggers? And then, Paul, I think that you did yourself a service on this one by saying that this 13 range chart was cranking strong, wasn't it? And then one more little piece for you, and this is something that I've been noticing a lot. Do you see the high volume area on this bar, Paul? Price goes up, comes back, retests that high volume area that lines up with everything, and then giddy up. I think it's an amazing momentum style trade. So momentum in, momentum out, right? Or loss of momentum out. So let's say you get into this trade and divergence prints on the 5-1. Great opportunity. You reach the next area, great opportunity. I think it's a great read. I would go back and find 100 pictures that look just like this. And I think you'll be amazed. Paul, this is essentially what Ron does. He has a little different look, but it's the same concept. On the S&P, and then Gary just reminding himself, I'm going to wait for some agreement. I'm going to wait for strong triggers. I'm going to wait for everything to agree with the trade. And that's why. Gary, what a great read. Small triggers are inside of the large triggers. There's no momentum, right? Did Discord blow up? Can you guys not see me? Give me a Y if you can see me. Is it just you, Gary? Paul, can you see me? Tony, you can see me. Abdul, okay, cool. Cool. Gary, you may want to reboot. It likes to kick me out every now and then. But guys, Gary's read is amazing. What Gary said is I've got kind of a 50-50 here. And I've got zero momentum on my smaller chart. The smalls are inside. The large are weak. They're turning. The smalls are down. Guys, do you see the fight that happens at 40.44? Look what it looks like on a 5-1. Nexgen users are not the only people that know about these areas. Nexgen users are not the only ones that are recognizing this area as a place for a fight. You'll see your 13.2 looks pretty mellow, right? Look at this absolute mayhem on a 5-1 as buyers and sellers duke it out at that key area. So what you do, if you're a conservative kind of fella or lady, is you wait for everything to agree again, right? You wait for everything to say up or everything to say down. You wait for those strong triggers. You wait for those areas. And you give yourself the best chance of success. Guys, I can't believe we have already blown through over an hour. The market's making us be patient today, isn't it? The market is definitely saying, hey, we're going to test your ability to stick to your rules. We're going to test your ability, and that's okay. What do we see now? Smalls are getting below the large, but the large are still above resistance. a little too soon for shorts. Definitely not looking for longs. Checking that checklist, making sure that we're good. Does everybody have my spreadsheet? Did everybody get a copy of this so that they can look at it? Guys, when there's nothing going on in the market, it's okay to take 10 minutes. Well, let me just remind myself what it is that I'm looking for. All right, I'm looking for everything to agree and everything to stay down, and I'm looking for an area inside of favorable large triggers. All right, cool, got it. Let's get back to the market, and let's wait for that look, because that's the look that's going to give me the best chance of success. Guys, I'm going to take a few minutes. I'll leave you with the S&P here. Or would you rather watch crude oil to see if they can ever break through this area? Guys, look at that range bound. In 15 minutes, they're going to release the reserves. Those crude oil inventories are coming out. And in case you didn't know it, John and I are twins separated from the head at birth. He'll think things and I'll start saying them, and then he'll type them, and they end up in the room at the exact same time. I'm going to leave you guys with crude oil. I'm going to be back in just a couple minutes. If you have a question, post it in the room. If you have a picture, post it in the room. If you're brand new with me, guys, do me a favor. Think of a question. Any question, post it in the room. Let's see if we can find an answer for you. I'll be back in just a couple minutes. All right, ladies and gentlemen, we are back. Getting into that second hour, albeit a little bit late. Crude news in about 10 minutes. What do we see right now? Here's one of those small triggers breaking above the area of resistance, trying to work its way up. The large triggers are up. Look at that split between large. Let's talk about favorable large triggers versus not so favorable large triggers. I want you to see something, guys. In the event of a pullback right now, if I draw this box from the top of my large triggers to the bottom of the synthetics, look at that window of opportunity from the highest point to the lowest point. As you're looking at nearly 20 ticks, $200 worth of risk per contract. And then conversely, look at the potential window of opportunity right here when those triggers are one on top of the other. Your 5-1 chart doesn't have my fib. Are you running synthetics, Abdul? Are you running the newest workspaces from John? There we go. Here comes John. You know I always want to help, guys, but I'm not the techiest of tech guys. But what I can do is teach you how to recognize advantages. Guys, give me a Y in the room. This may be a picture that you want to put into a spreadsheet. Does that make sense to everybody? That window of opportunity is smaller and easier to manage when those large and synthetics are one on top of the other. You guys must be in a trade. It's awfully quiet. Joel, let's see what you did. Area of support inside of favorable large triggers, right? Just steal the picture, Abdul. Or if you want, let me get through Joel's picture and then I'll show you. All right, Joel, are you with me? Termination condition, right? Termination conditions. No termination conditions. That should be a no, shouldn't it? I like that you didn't enter the trade. So good job not entering, not trading into an area likely to stop the market. Abdul, I'm going to give you this link right here. Does it? It has all the right indicators in your favor? Oh, Paul, I thought that was Joel. I was like, Joel, there was a termination. Abdul, there you go. That's that Ninja Trader guide. And then John's picture. I'll give you an actual link to the picture. I'm not sure if that's in that crash guide or not. And then Thala, you asked why so. Can you help me on why so what? And that'll help me give you an answer. Sometimes you guys ask a question and I forget what I was talking about when you asked it when I scroll back. And while you type that out, Safia, let's see what you did. Oh, I got you. There you go. Safia 50-50, medium probability trade just didn't work, right? That one crashed on you. Sorry. It's just a 50-50, isn't it? So it's a medium probability. Going back to 7. Yeah, and that one just didn't work out. That's all it was. You might have been able to tighten up just a little bit on that 50-50 outside of the window, but I think you gave it the best chance that you could for a medium probability trade. You guys, that's something to remember. If you're taking high probability, right? If you're taking high probability and you are anticipating following the rules and being successful 70 to 80% of the time, well, you know that out of 100 trades, you're going to lose 20 to 30, right? Guys, I don't have a number for you on what you should expect your win percentage to be on medium probability trades. I can tell you that when I focus on high probability, guys, I've had 30% winning days with money in the bank. So, yeah, just you wanted to see what would happen, Safia. So, Thala, why do I feel that the large and synth for a better entry? It's not that it's a better entry. And let me go back to a picture to show you. Did I take a picture of the picture? I did. So, Thala, are you ready? This was your entry, right? And it was a little outside of the window, but that's okay. But do you see how when the small or when the large and the synthetic overlap, if we whittle this down to the areas inside, it's literally that big. But when the large are up here and the synthetics are down here, from your highest point to your lowest point, look at how big that is. So if your stop has to go below that window of opportunity, if you get in at the top, that's huge, right? But if they're one on top of the other, look at how tight that window is. Yeah. So it's not necessarily that it won't go from the top, but don't you have to, yeah, you have to increase your risk an awful lot. I'm a huge fan of these trigger lines trending one on top of the other. I feel like it gives a great advantage. Gary, let's see what you did. Flat triggers, says down. You're waiting for something a little bit better. Paul, not your trade, but it has every indicator in your favor. All the right indicators in your favor. Let's see. HVA. Pull back to the one-to-ones, triggers down, everything rolled. It's a little snapback. No divergence. Kind of counting on that being a little overrun and coming back, right? I think it's great patience, and I think that you do give yourself a lot of opportunity there, Paul. How did it turn out? The only challenge that I see with it is that the large triggers hadn't made it yet, but I think you did. I think you weighed advantages. And I think because of all the advantages that you had, you were willing to take a shot. And so far, it's working out nice. Nice trade. Great chart reading, Paul. And then you're going for the fib. Everything says down, right? Took quick profits, took second targets. Everything says down. Watch that mid-band, right? Mid-band's not a bad spot. And guys, inventories are out in 1 minute. Mid-band, Paul, especially in a move that big up, that mid-band can be tricky. So Gary, when you say that you were tempted, so go back with this picture, right? And I love it when people say, man, I was tempted, but I didn't take it. I was thinking about taking it, but I didn't. Guys, remember that it's okay to go back and annotate. It's okay to go back and say, well, by this time right here, divergence had printed, the large have rolled, the smalls had momentum, every trigger line rolled, no divergence. And Gary, you may say to yourself that if all of these line up the way they did, you'll take a shot at it to get to the midband, right? Does that make sense, Gary? Go back and re-annotate. That's okay. You know why? Guys, people are overcautious when they're scared to lose. People are overcautious when they don't trust a trade. People are overcautious when they're taking the wrong trades. If you give yourself too many things to look at, you're going to look at everything and you're going to talk yourself out of great trades. And you're going to talk yourself into poor trades. Paul, a couple ticks off that midband, divergence prints. I'm just saying, be aware, right? Be aware of that midband. Don't you have odds favorable? Your large triggers are down. You've got one divergence and it pulled right back to resistance inside of favorable large triggers, didn't it? This darn near, call me crazy, looks like a potential entry. But what's the challenge, Thala? Look at that resistance inside of synthetics all the way up there. Do you see that? Thala, a little bit of recognition after the fact. I've got resistance all the way up here as well. I've also got divergence. It may not get all the way up there, but if I didn't take this first momentum style trade, I have to at least say it has the potential. All right, David, let's see what you got. Trying to anticipate that breakout, right? So we've got smalls through the area. The large haven't quite made it yet, right about here. If you're taking this entry, 74.24 is a potential termination condition, right? And you're in this market that's been range bound for almost 2 hours now. Do you see it, David? I like the read. Everything agrees. Everything says this market has the potential to go up. But when you've had 3 divergences in this price range, when the market hasn't been able to break this low, 74.24 represents the top of that range, right? And it may break. And sure enough, it did. So now we finally started to break out of a range with a little momentum. Took it, got out 100. I think that's perfect. I think if you're recognizing the potential risks and you can manage assertively, isn't it amazing that you can do that you can identify these places? Guys, this is one of the most amazing things about Fibonacci is these key areas create fights, right? So if you're trading to the area, you know where the fight's likely to happen. And you can see these fights happen. 5-1 looks scrambled with the 13-2. Looks great. So now what do we get? Now we get that 50-50, right, at the top of the range. David, you took the trade to the top of the range, not trying to anticipate the breakout. Nice job. $50-50 at the top of the range, no divergence. If you got in, didn't fill you. And then Paul, on that same token, if you got in at the 50-50 at the top of the range with no divergence, aren't you a 50-50? Look at that fight, guys. Resistance, support, resistance, support, resistance, support. 50-50 doesn't work. 50-50 doesn't work, guys. It's okay to wait for a clear path when the market's been consolidating. All right, Ronald, let's see what you did. Thought you had everything to the downside, but moved stop loss to break even +1, and you got stopped out. Ronald, you may have been in the trade when we were talking about it. You took, if you're going to take this entry, it's manageable from the areas. You know how we always say great entries create manageable trades? Ronald, if you're in at 42, you've got a ton of profit potential down as you get into that mid-band area. This divergence shows a loss of momentum. Break even +1 doesn't get you out of this trade. It keeps you in it as it pulls back to resistance. Guys, great entries create manageable trades. And look where it pulled back to, Ron. Right to a mid-band inside of favorable large triggers, didn't it? Does everybody see that? If you're in at the best spot, break even never gets touched. If you're in 2 points, 1.5 points below the best spot, guys, break even is chumming the waters. Break even is right there at an entry for a high probability trend trade. Does that make sense, Ronald? And really everybody. David, everything rolls off of that termination condition from range bound. You take one of those momentum styles right at the mid-band, quick profits. 73.85 seems like a good spot where the market's likely to go. But your area for inside of favorable large triggers is at 16. So if something changes on your 5-1, it gives you an opportunity to manage it. David, you're pulling chunks out of a range-bound market like a pro. And the coolest thing I think here is that you're using momentum and a clear path to do it. And now you get down to support, right? You've got that idea of where the challenges can happen. I love it. Absolutely. So, Thala, 2 things you can do with scrolling is if you squish everything together like I do sometimes, if you click the capital F in the upper right-hand corner, it'll scale you back. When you don't see that F, you'll always see the price. And the other thing is if I scroll forward and I don't see the current price bar, this arrow will bring me back. And if I scroll back, this arrow will bring me forward. So as long as you keep doing this, you're going to see that arrow. If you don't see the arrow, if you don't see the F, you're always going to be able to see it. It's always going to keep it where you'll never lose track of it. But what people do is when they go short, well, let me give it more room to win. Has anyone else done that? And you do that, and if you walk away for a minute, you come back and your chart looks like this. And you're like, holy smokes, where'd the market go? Click that F. There it is. And then David, on yours from that short, 85 is the edge of that range, right? 85 is the edge of where that market's been consolidating. You guys know where it needs to break, but that's 2 attempts at 50-50s that got stomped because of a range-bound market, guys. You're using Fibonacci to determine that range-bound. Tony, great entries make manageable trades. I feel like I'm going to say that 100 times. Great entries make manageable trades. You guys fudged the rules a little bit on the entry. That's okay. I like how you did it. You had momentum, right? You're coming from a termination. That mid-band and resistance, guys, it's a good look. But if you're getting in at the top, if you're getting in at those areas, if you wait for the market to go in the other direction, you're increasing the heck out of your risk and you're making it difficult, right? You take a tick or two and then go break even because you're scared, and it gets you, and then it starts to run. Great entries make manageable trades. Paul, big gap at the mid-band. You're just going to hang out a minute. You got in. You made some money. And now you're just going to hang out a second. Wait for that clear path again. I love it. Oh, look at that, guys. Sellers trying to make a move, right? All right, Thala, if you squish, capital F always brings you back. If you knock it to the left, this arrow brings you back. If you accidentally hide it, the arrow brings you back. So you can literally, yeah, like if you wake up in the morning and your chart looks like this, hit the arrow, hit the F. You know, I think there's a way to keep it centered, but I'm not sure. Here's the help guide. You guys know that there's instructions, right? So there's all sorts of stuff. I'm not sure about how to automatically do it, yeah. But for me, that works. Guys, they broke out of the range, didn't they? And then when they broke through that range, who's going to show me this picture? Odds favorable, hadn't reached the next area, no divergence, pull back to resistance inside of favorable large triggers. And guys, this one dropped for $250 worth of profit. Does it fit the rules? How many of you, because you had to wait so long, didn't take that trade because you thought they might be up to shenanigans? You? So there's two ways. Guys, write that on a piece of paper. Either your rules are met or they're not, right? If they're met, take the trade. Why? Because your rules tell you that with the advantage of momentum, with the advantage of a clear path, look at that entry. Gary, absolute rock star. All of your patience paid off. This is the difference. When you miss this one, when you miss the best of the best, guys, that's when people start taking those iffy trades, those maybe trades. Absolutely perfect, Adam. Absolutely perfect. Easiest $300 you'll ever make, right? And then, Tony, you took the medium probability. You guys notice how once they broke out of that range, it was no breaks. Look at that entry. Couple ticks below. Boom, boom. Tony making money. Thala. Whoops. Let's see what Thala did. You missed this entry where you believe everything was aligned. You did. That's okay. But you also missed this entry where everything was aligned. And you also missed this entry where everything was aligned. Absolutely. And guys, I know that I sound like a broken record. Write your rules on the chart. What's the worst that's going to happen? You're going to reinforce your ability to follow rules. You're going to verbally, well, not verbally, with your fingers, type out the advantages. Guys, you're building trust with every chart. I know it feels like work, doesn't it? I can make millions of dollars a year being a day trader, but it sure feels like work to have to write that stuff on a chart. Guys, do you see how once they got south and everything went below that area that had been holding them up? Boom, down it goes. Anything can happen triggers. Losses of momentum, anything can happen triggers. No areas inside of favorable large triggers. Right to support, right? Tony, you've completed 3 Apex accounts with the rules followed. Tony, are you suggesting that the rules work? We all know they do, right? The only people in this room that don't know the rules work are the people that haven't done the work. Well, Mark probably picked every one of these pictures and skipped all the ones that lost, right? Wouldn't that be a great sales tool, guys? Let me give you 130 pictures, and I'm only going to show you the winners. Or maybe I'll put the losers in my spreadsheet because it's still the best look. You guys see this one? Strong triggers, no termination conditions, pull back to the area of support inside of favorable large triggers. Boom, run over and a loser. But that is such a great one. I'll take it every time. We've got other ones that don't work in here. Here we go. Gary had one right here. Odds favorable, no termination condition, perfect entry, didn't work. Anything that wins 70 to 80% of the time, guys, is obligated to lose 20 to 30. And then just like Gary said, go through and make sure that you're giving yourself the best chance of success. Guys, excuse me just 1 second. I'll be right back, and then we will look at those pictures, Bobby and Joel. All right, guys, I'm back. Sorry about that. Use the checklist, right? Give yourself every reason, every advantage. Make sure that you know what you're looking for. Here's that checklist one more time for you guys. Go back and study the best of the best looks so that you don't miss them when they set up. There's both of those in the room for you one more time. My gifts to you. All right, Bobby T, I'm anticipating good news. Bobby T says that when he has odds favorable momentum, when he has no termination conditions, when he has a pullback to resistance inside of favorable large triggers, he'll take the trade. And you entered late because you wanted to see a turn because of where it could have gone. Bobby, I think that's brilliant. There's times, Bobby, when I know I have a bigger window of opportunity, I'll let it run past the low, and then I'll put in a stop entry. Well, if it comes back down, then I know that this is where I want to get in. I still have to have that risk, but I think you did that one perfectly. Nice job. Bingo feels good. Joel. Everything says down. Joel, nice job. Great trade. Look at that. You got in high tick. No, you didn't. You got in a little lower. It's hard to see because you don't have them on this chart. Nice job, Joel. Why not this entry? And not beating you up. Great job. But wasn't that a rules-based trade? Wasn't that a rules-based trade? And this is just a little lesson on trust, guys. Every time you take a trade, every time you take a picture, you're validating the trust, right? You're creating an awareness of when those advantages are present. If this was $300 from a rules-based trade, guys, isn't that $900 from rules-based trades? And then when we don't take these two, that's when people start taking these iffy trades. Man, I missed it. Man, I missed it. And if you didn't catch this one, that's when we start making bad decisions. They are, aren't they? Joel, great trade. And I hope you guys know I'm not trying to make a negative out of a positive. And that's it. Look at that. Anything can happen. Small's inside. No thank you. Paul, great chart read. If you missed the three that were easy, you'll probably take the one that isn't. And Joel, yours wasn't perfect by any means. Small's inside. Anything can happen. Yours worked out. But these two were your effortless trades. These two were the effortless trades. Nice job. David L. David L., I absolutely love how much you're posting charts in this room. Look at that. Everything says short, you go short, you get paid. Everything says short, you go short, you get paid. Everything says, we might go short, you go short, but you get paid. You still have resistance inside of favorable large triggers and a clear path. Guys, the only thing that you gave up there, David, was momentum, right? One small issue exists. You take the entry, again, on the way down, using that Bobby T method. Your risk is established. Everything says down with a clear path. You don't have screaming triggers, but every trigger says down. You're not fighting a darn thing. And it works out beautifully. Then divergence prints, and out you go. David, did you change your name? Were you DHL earlier this week? And I'm asking because if I'm not mistaken, David, brand new, right? Fresh in with Nexgen? It doesn't have to be hard, guys. Sometimes, okay, that was you. Oh, not DHL? No. You don't have to think, right? You just follow some rules. How do we feel about this one? Oh, that was you. I thought so. David, you're killing it. What do you think, guys? Odds favorable. Hadn't reached the area yet, so we still have a clear path. And there's a pullback right to resistance inside of favorable large triggers, and it finishes the move right down to the fib. Does that one fit? I feel like it fits. And there we go. We lost momentum. There's three divergences in the same price range. Who took that short because they missed the other ones? I've done this trade, guys. I'll admit it. You don't have to. I've taken that trade. I missed it. Rats. Oh, I missed it again. Rats. Man, I missed this one. Rats. Well, let me take the one where things don't look good. And Tony, you were tempted to short, but you canceled it. You're saying that you didn't trade into support with the potential to hold? Killing it, Tony. It's easy to follow the rules when following the rules provides those winners, doesn't it? Does that make sense, guys? It's easy to follow the rules when you take the trades that were perfect, you skip the trades that aren't, and you exercise that patience. And what you're doing every time you take the right trade, win, lose, or draw, you're teaching yourself, take the trades with the most advantages. Take the trades with the best looks. Take the trades with momentum, with a clear path, and with an area for entry. And what happens is things tend to work out. Great trading today, guys. Man, we're already through the second hour. You know, I ask this about once a month, and I'm going to ask again. Does it work? Guys, does the simplicity work? Does the momentum, the clear path, and the area for entry work? There's going to be two sides of the coin. There's going to be those of you that say, yes, it absolutely works. And there's going to be those of you that say, I'm not sure that it works, but I think that it might. If you're not sure, and that's okay if you're not sure, I always encourage people, prove me wrong. Guys, tell me I'm full of beans. I had someone reach out to me one day and they said, Mark, this setup that you're talking about, it's bullshit. It doesn't happen. I know it doesn't happen because I can't seem to catch these trades. And I said, all right, let me see your plan. Well, I don't have a plan. Well, do you have at least rules? Well, I don't have any rules. So you don't have plans and you don't have rules. You don't know what you're looking for, but you're telling me that I'm full of beans? Guys, it's okay. I never get mad when you tell me that I'm wrong because the reality is I want you to prove me wrong. I want you to say, Mark, you're full of crap and here's my back testing that proves it. Nobody's done it yet. If you keep it simple in the beginning, right? Use that plan. This is my trade. This is what gets me in. This is what it looks like. I've never had anybody follow this plan and not be on the winning side of things. Not yet. The key is, can you follow the plan? When you get bored, can you follow the plan? When it doesn't give you opportunities, can you sit on your hands? The hardest thing about being a trader for me isn't learning the rules. It's not understanding the patterns. It's not anything other than doing absolutely nothing when there's nothing to do. So practice from the beginning, right? Practice from the beginning of being patient, of waiting for the absolute best of the best. Guys, there's opportunities out there every day. And then Tony, John gave you a little bit. Here I have an area with the potential to break, right? So the smalls are through, the large are not. Three divergences tell me, hey, you're losing the advantage of momentum. Maybe give it a second. Let it break. Crude oil, anything can happen. Three divergences, off to the races, right? Right back up to those key areas. Resistance holds, pushes you right back support and beyond support inside of favorable large triggers. Termination conditions. Isn't that amazing? This is how your day went, guys. You had to be patient. You had to be patient. Little opportunity. You had to be patient. And then Crude said, guys, Nexgen users, thank you for your patience. Let me reward you handsomely all the way down. And then I'll let you know. Crude oil told you. They said, hey, I'm losing momentum. Don't be silly. Your 5-1 said, hey, I don't know if you saw it on the 13-2, but we're losing momentum. Don't do anything crazy. Chart reading told you everything you needed to make an awful lot of money this morning. You just got to learn and trust the looks, right? And John, exactly. You'll find what's best for you. Guys, some people like different time frames. Some people like big charts, little charts. There's people that change the colors on their charts. I know we've got some colorblind traders. They don't worry about blue or green, or green or red, excuse me. They worry about the small triggers above the large triggers, right? I don't need this line to be red to know that price reached it and none of my trigger lines broke through, do I? No matter what color that is, isn't it still a termination condition? Well, of course, that one defaulted to red, right? Let me make this one linen. With a linen colored Fibonacci, isn't it still an area that was reached that absolutely no trigger lines broke through? Guys, do you see how simple you can make it? Allow it to be simple. All right. So crude oil's into a termination condition. We're in a holding pattern. The S&P is at a 50-50, right? The potential to break but hasn't broken. Multiple divergences. It's all right. It's all right to wait for total agreement before pulling the trigger. Lots of opportunity on the way down. Guys, I'm going to take a few minutes. When I come back, the last hour is going to belong to you guys. And I say that every day. I want you guys to hold me to it. If you want to talk about something specific, if you want to look at entries, if you want to talk termination conditions, let me know what you want to talk about, and we'll talk about it. If you take a trade, post a picture. If you don't take a trade and you have a question, post it in the room. I'll be back in just a couple minutes, guys. All right, guys, here we go. Last hour. Tony, when you go to templates, the one that he's talking about is the generic range bar chart. No, where is it? Generic range bar chart with market flow 2023. I believe that's the one, yeah. But with market flow. You're welcome. I went through it all with him this morning, yesterday afternoon. Guys, I've been on NinjaTrader 7 nonstop through this whole transition period. I've made sure that I've stayed on NinjaTrader 7. And John's done, I wish you guys could see him work behind the scenes. He has done so much work trying to figure out what's causing the problems, what's going on. And he really has, I think, come up with a fix. I do not run a supercomputer like he does. And this right here has kept me running. Guys, we've taught the whole class, right? We've taught the whole class through 8 today. It's been fine. It's been good. The one thing that I've noticed is when it's opening, let it open. And I like to open with no workspaces. So when I pull up NinjaTrader, it connects. Yeah, and a lot of users have done it. When it's connecting, I don't touch it. And then when I open up my first chart, I don't touch it. A lot of us like to click and drag and move. If any of you have ever met my wife, she'll click on the same thing 800 times instead of letting it open. I typically do that too. So, but when I leave it alone, yeah, I got him, John. When I leave it alone and let it do its thing, it typically works out. Guys, check it out. 50-50, 4 divergences in the same price range, smalls inside the large. Pretty cool, right? It's all patterns, guys. Patterns repeat themselves. Tank, let's see what you did. All right, Tank, you had anything can happen triggers, and then everything rolls, and everything says up. You have odds favorable. It's a 50-50, strong triggers. Looks like you took one momentum style. Nicely done. And then when you reach that area, you take a perfect entry, makes it super manageable. And Tank, you've already got your reversal bar on that one, so it's appropriate to reduce risk when it begins to do what it's supposed to do. Nice trading, though. Like that momentum style, taking advantage of it, clear the areas, boom, boom, boom. Great trading, Tank. All right, crude came off the resistance area. Created a full reversal. Gives us odds favorable momentum. Should we draw a little bit? What do you guys think? From the top of the triggers to the bottom of the triggers, with everything coming down, we are on a collision course to areas of resistance inside of favorable large triggers, aren't we? Medium probability trade. The area has the potential to break, but it hasn't yet broken. You've got 2 divergences, but you still have strong triggers. There's the bottom of the window, there's the middle of the window, there's the top of the window. It's a 50-50, absolutely, Thala. If I had gotten in at the bottom of the window, my stop is probably going to be somewhere right up here, right? Where the market shouldn't go. It's about 7 ticks of risk per contract. I've already had 2 divergences, so I know that I've lost momentum twice on a 50-50 trade. So it's going to be managed assertively, right? It says it right in the user guide. 50-50 trade, the more advantages you give up, and that's okay. It's okay to not take trades. You guys know that, right? Whoops. And there we go. We're testing the supercomputer, right? I just crashed live with you guys. Spontaneous shutdown. Maybe it has something to do with all the manipulation. Because it's okay to not take 50-50 trades if you're not comfortable with 50-50 trades, right? It's okay to not take those medium probabilities. It's okay to focus on the absolute best of the best in the beginning. And I'm going to take just a second here. And I'm going to pull up my 7 just for stability reasons. If you guys will be patient with me for just a moment. Remind you guys about the path, right? Post your pictures in class, guys. Talk to me every day about what you see. Talk to me every day about what you think. Learn the trigger line and Fibonacci rules so you know when it's okay to trade. Don't practice the wrong trades. It's important that you understand what those advantages are, and they become pretty easy. They become very easy to recognize very fast, and it's just a matter of momentum, of a clear path, of an entry. The rules will take you no time at all to learn. It'll take you a little while to begin to apply them daily, to catch them when they happen. Simulate your trades daily, guys. Get in there. It's monopoly money. You should never be afraid to lose fake money. You should take every entry you think you see, take a picture, post it in the room. Even if it's wrong, we'll talk about why it's wrong. We'll talk about how to do it better. Don't practice the wrong trades, though. Yeah, don't be afraid to post it here. Guys, there's a difference between losing a trade and practicing the wrong trades. Anything that wins 80% of the time is going to lose 20% of the time. Just because it loses, it doesn't mean that it's wrong, right? That's not practicing the wrong trades. It's telling yourself everything says up, the momentum is up, the direction is up. I don't have any rules met, but I'm just going to try to go short at red resistance because there's a red line. Guys, that's practicing the wrong trades. That's setting yourself up for long-term failure. Simplify your plan. What are you going to look for? Guys, that's that checklist. That's that plan that we talked about. Practice them every day until they're easy. You got stopped out since you took a very small stop loss? So Thala, you're running your stops too tight? You're not giving it a chance to breathe? Is that what you're saying? Show me a picture. Guys, you can use market replay to go back and study every day. You can retrade the day. You can fix your mistakes. So Thala, get me that picture and let's see where your stop was and see if it made sense. Gary, 50-50, 2 divergences, perfect entry, third higher divergence, perfect exit. Nice job, Gary. Medium probability trade, managed assertively. Very nicely done. Guys, you know that if you don't post here, I don't have a job, right? Give me some job security. Keep those pictures coming. And then Adam, perfect. 50-50. Great entries, make manageable trades. Look at that, $100, and then you're willing to give up a tick. Beautiful. Adam, I like this. Adam, this is day and night from the beginning of last week, isn't it? Just having that little definition for management. Man, really great job. And guys, I've said it before, I do get excited watching you guys do great things. It makes me excited. Thala, you have divergence on a 50-50, multiple divergences. You went long and got stopped out. You went long again and you got stopped out. Thala, I'm having trouble seeing your stops, but if you were in at 70 and you were out at 64, you're telling me that you had 5-tick stops? How'd that work out for you? Why would you use a 5-tick stop? Okay. So do you know how to adjust your plan so that they don't show up at 5 ticks? Your ATM strategy? Adam, great job. What didn't happen today? Did you break your rules today? Right on. Thala, I usually put mine at about 12 to 14, and it gives me time to adjust. And you know what, Adam? You're going to break rules. There's nobody in this room that hasn't broken rules. Thala, if you wrote your rules on the chart, do you suppose they would fit? So where you're getting these mixed signals, they still fit the rules? Will you show them to me? No, they don't. And that's okay. Guys, it's not my job to determine whether or not your rules are good for you. It's my job to talk about them. And that's the one that broke it, right, Adam? God, how normal is this, though? You got it and you got paid. You didn't take this one. You're doing awesome. And then here we're just giving away those advantages. And you knew it, right? And you knew that you were hoping a little bit because your stop's all the way up here and not right behind the reversal bar. Could have been a smaller loser. But that's okay. Because, Adam, can I give you the other side of the coin? And let me know if you were thinking this. And you may not have been. You were thinking, man, there was all this consolidation up top, and it finally breaks out, and it's rocking down, and it was stuck forever, and everything is set down, and there's a clear path, and these triggers are still down, and you're like, man, I'll give it one more, right? I'll give it one more shot to see if it wants to keep that trend after breaking out of consolidation. I think that, Adam, is a chart reading thing. That's where you begin to go, this is what I see, and I think that you saw it perfectly. And it becomes what you see versus what your rules say. And that's where the better you get with the software, that's where people trip up a little bit, right? That's where people go, I see this, but my rules have to say that. Yeah. But Adam, it's normal, especially as you get better as a trader. It really is. Don't beat yourself up over breaking your rules. Identify it, take a deep breath, and commit to getting right back to your rules. It's when you go short here, and then you go short here, and then you go short here, and then you go short here, because your opinion is that the market's going to continue down. Does that make sense, Adam? I think everybody takes that one sometimes because of the overall of what's going on with the market, because of the clear path, because everything still says down. You're like, you know what? One more shot. Let's see if it finishes the move to Fibonacci support. All right, Thala, let's see what you have. So this is showing short side. The only thing we have to do is wait for the background to be green with a potential entry? Absolutely not. So Thala, you've got odds favorable momentum. You have no termination conditions. You have an area of support, but they're below the area, right? They're a little bit below. And those small triggers have gone smashing through. If you got in at the mid-band right here, you had a reversal bar. And then that lower divergence lets you know that it may push a little bit further. This is just a trade that you have to use management on. It's rare. You can do whatever you want, Thala. The best entries create manageable trades. If you got in at 89 or 90 right here, it's green at the best entry though, isn't it? Here, let me show you. We'll just pull up the 5-1. There's your best entry right there. Do you see it? There's your pullback to support favorable large triggers. And then the market moves, and then you get a lower divergence. But your stop after that reversal bar is right below that reversal bar. It doesn't keep going. Yeah, but the best, everything agreed. And then what you just did, Thala, is you recognized that everything started not to agree. What a great management. You would have been stopped out. You want to know the truth? I would have been stopped out. Why? Because I had odds favorable. Because I hadn't reached 74. Because I had an area of support inside of favorable large triggers. Because it fit the rules. And then by the time it turns red, Thala, it doesn't fit the rules anymore, does it? See, I love these pictures. Guys, it's easy to do analysis with a still chart, right? It's easy to do analysis without the pressure of taking a trade. Go back and look at your trades again, guys. Always go back and look at your trades. Study them over and over. All right, Tony, odds favorable, hadn't reached the one-to-ones yet, perfect entry, money, money. Nice job. Thala, this is the same trade, isn't it? Just had to relax a minute. Came back and did exactly what it said it should. That's trust, right? That's developing trust. Part of trust is patience. Small triggers are up, large triggers are down, synthetics are down, large are up. No rules met for a trade here. So what's our option? If your rules aren't met, you got two options as a trader. Rules met, take a trade. Rules not met, don't take a trade, right? How easy is that? Gary? Termination areas. Got some extra fibs on there that we didn't have, right? That would have been picture perfect. You had your 21s there, giving you a little bit of guff. And now you're coming up. You've got a 50-50. Gary, this is very much a 50-50, isn't it? The smalls are above the one-to-ones, the large are not. Do you recognize that? Because we haven't reached 08. But the smalls have broken above 74. So price hasn't reached an area and the trigger lines remain below. Smalls have broken above. But you do have split triggers. Yeah, you do. You probably paid extra. When your brother writes the software, he holds things back from you. Is that crude oil? I don't even have my crude oil up on 7. I went to 7 real quick. We'll open up my crude oil. But even so, even with more areas, smalls are through, right? Strong triggers, smalls are through. It's not the prettiest look. And then Tony, as the smalls begin to break through, you take that entry at the mid-band. Quick profits, kind of a super tight stop, right? I like the way you wrote this though, Tony. Target 2 stopped at fib support. Stopped at the area of support inside of favorable large triggers. Stopped at the entry point for a trend trade. Does that make sense, Tony? You see what I did there? You were sat on the back of the boat and kept throwing fish in there, and the shark came and got you. Great entry, perfect profit spot. At this point, you have to make a decision, Tony. If you're really worried about 7404 stopping everything in its tracks, take the exit, right? Or if you're going to say, I really believe it's going to break, then you've got to put your stop where the market shouldn't go. But that was a 50-50 at best. And you had 2 divergences, and you had weak triggers. Tony, you had some pretty good reasons to not stay in that trade. I like it. It's great management. And now we're just right back to it, right? 50-50, couple divergences, pushes lower, split triggers. Let's let it get out of this box. Looking for the next one. Guys, what do you want to talk about? All right, Alan. Alan, so you're saying that with strong triggers and nothing in the way, you'll get in at support, quick targets, break even. I like it. 2 divergences on a 50-50. Can I show you what else I see? And I love it when I see this. You know 95 can create a lot of trouble, right? Guys, everybody sees that? This is a 21-3 chart. So if the 21-3 says termination, and the 5-1 says 50-50, or the 13-2 says 50-50, and the 5-1 prints those 2 divergences, great reason to not hold on to the trade. I love the first trade, though. Odds favorable, nothing in the way, haven't reached the key area, no divergence, pull back right to support inside of favorable large triggers. Alan, that was the best. Look, the second entry that you took, still okay. Smalls are up, they're kind of outside, only 1 divergence. You take the trade. 04 becomes your trouble spot. 04 also happens to line up with that ugly spot there. Break even is appropriate after that for sure. Nice trade, Alan. Great management. Great execution on that. It's okay to take medium probability trades, isn't it? It's no worries as long as you can manage them assertively. As long as you pay attention to that smaller, faster chart. Termination, indecision, support. Guys, what do you want to talk about? Follow, what do you want to talk about? Jar Jar, what do you want to talk about? Was it Adam from New Mexico? What do you want to talk about? Piney Ski. I always read that as Pineski. I make you Russian, Paul. What do you want to talk about? Gary, what do you want to talk about? Tony, Bobby, Joel, David L., Shogun. Guys, this is your class. I know this stuff. What do you want some clarity on? Let's talk about it. Nope. Are you ready, Shogun? Great question. You want to see what I look at to establish direction? Background color. If my background color is red, I look for rules to be met for short trades. If my background color is green, I look for longs on the 13-2. How easy is that? That's it, Shogun. I'm trading with the overall trend. This is why I use that larger time frame. On the 13-2, trading with the overall trend, yeah, keeps me safe. Keeps me happy. Keeps me focused, doesn't it? Watch the color. And then once you get the color, and here, are you ready to see something cool, Shogun? The color's red, right? Once those small trigger lines break above the large triggers, see how it paints green? There is absolutely no way for me to have momentum to the downside with a green background, is there? Smalls break below the large. There's absolutely no way for me to have momentum to the upside with the smalls below the large. So not only does it change the color to keep you focused on the trend, you can't have odds favorable momentum if the smalls aren't on the correct side, if you're not trading with the trend. It all works together. It starts with trend, and then from trend you go to momentum, and then from momentum you recognize your clear path, and when you have that clear path, guys, then eyes go over here. Indicators crossing cause color change. Let me get you that picture. Actually, you know what, Shogun? Let me give you an awesome page that John Novak put together not too long ago. And it starts with exactly what we just talked about. This will take you to the trigger reading section. And in the trigger reading section, the first thing that it talks about, if you scroll up to the top, because all we're doing is reading triggers, right? Check it out. It tells you how the background changes color. And then it goes into using those trigger lines for momentum. Very step by step. All right, Paul, the momentum you guys took a while back on the ES. I didn't send a momentum picture. Paul, the rule of thumb on that is if you're relying on momentum to get you in, loss of momentum should get you out, right? Because then it's no longer a momentum trade. How do we identify a loss of momentum? Well, we identify divergence as a loss of momentum. Or if you're in a momentum trade and it hits an area, that's a good reason. Not necessarily an up bar. It could be. Because what happens when you have an up bar? You go from outside to inside, right? I don't think it's inappropriate at all to have a reversal bar tell you it's time to get out of a momentum style trade. Because what happens once that reversal bar takes you out, you may have a trend trade waiting right behind it, right? Why not get paid and then just take the next high probability? Go back and look at them though, guys. We build plans through repetition. I don't take momentum style trades, guys. My brain doesn't click with them. I don't know why. So I don't have a guaranteed stop plan for it. But for me, if I'm taking momentum in, I think momentum out is a good reason to get out. But if you take 100 pictures of that trade, you'll come up with a plan pretty easy. All right, Thala, did that help, Paul? Does that make sense? It almost sounds too remedial. Yeah. Everybody wants to hit a home run, guys. Momentum trade is a base hit. It really is. A momentum trade is a base hit. It's a get in with that momentum, get the heck out when that momentum is gone. Thala, you're confused with the definitions, small triggers, large triggers, fibs, one-to-ones. So multiple divergence, if you go to the glossary of terms, Thala, this will help a lot with it, especially if you're one of those people that need definitions. So when you have divergence, what it is it's a comparison. You don't see these MACD BBs. These are behind the scenes, but they're written in. But this shows you exactly what divergence is. If price is going down and this momentum indicator is going up, it creates a divergence. What I like to do, because I'm not that smart, is I just identify divergence. Every time that negative number prints, I have a loss of momentum. Absolutely. So when we talk about termination conditions, and again, I'm not just going to give you the fish. Let's teach you to fish as well. So here's your link to termination conditions, right? This is everything in the user guide to help you out with it. The first thing to remember is that it's a comparison. It's a comparison of these areas to your trigger line strength. And there's 3 ways to look at it. Price reaches an area if absolutely no trigger lines go through, and I made a simplified picture. Let me show you. If price reaches an area, Thala, and absolutely no trigger lines go through, it's a termination condition, right? No matter what you think, what you want, what you feel, this is an area that may reverse the market. When both the small and the large triggers break through an area, you now have a clear path. The termination condition is no longer present. When the smalls break through but the large do not, the area has the potential to break with that momentum, but it hasn't broken yet. The market may still reverse. And if you look at what happened here, the smalls broke through but the large didn't, and the market ultimately reversed. The smalls broke through but the large didn't, and this becomes that medium probability trade. Smalls are breaking through, the large have not. I can identify my lowest point of resistance inside of favorable large triggers. I can activate a limit order. But I know that 73.50 hasn't broken. I know that 73.62 hasn't broken. And I know that 73.65 hasn't broken. So I know that if this order gets filled, it's not a high probability trade. I can use that comparison of trigger lines to the areas to help me gauge whether or not I have a clear path or not. Does that help? If you stick to that recipe every time, price reaches the area. Watch this. Price reaches the area, no trigger lines go through. You might have 1 million. But there's really only 2, Thala. There is price reaches the area, no trigger lines go through. That's a termination condition. And then the second one that I believe you were thinking of is from the manual. Remember that price reaches an area. Where are they? Is 13.2. And then on your smaller, faster chart, Thala, you'll see those 3 divergences print. And what's a divergence? It's a loss of momentum, right? So when you lose momentum 3 times, doesn't matter what the number is, right? If you see it 3 times, it may reverse the market. And then Thala, it becomes even more powerful when you go from odds favorable to anything can happen. And it becomes more powerful still. You have a little history of trading, right? You recognize a head and shoulders pattern. Your third pivot is higher than the previous. So they're all termination conditions, but they become more likely to reverse the market as you compound them a little bit. When you go from odds favorable, yeah. And there it is up top. But you see how a head and shoulders on its own may not change the market. But now you have the advantage of seeing that there were losses of momentum as well. Now you can see it in the trigger lines as well. So it's like confirmation, taking an age-old, fundamental and then being able to visually see it, that it becomes stronger and stronger. So we need to see the triggers crossing in the 13-2. Absolutely. And make sure that you don't have 3 here. And then Thala, the other side of this, if 3 divergences tells you that the market may reverse, if you took this entry at resistance inside of favorable large triggers, you can identify your first potential trouble spot as that divergence low. 2 divergences isn't a deal breaker. There's another entry. But when you get that third divergence, when you get those triggers inside, doesn't that give you the opportunity to manage out of this trade without a loss? Because you can visually see that the momentum has gone away in the trade. This is how you manage medium probability trades, Thala. Those 50-50 trades, if you take the entry, you can see when that area probably isn't going to break. And I think we had it on the S&P. And there's your great example. The smalls break through, but the large don't. Look at these divergences on the 5-1. Look at the trigger line location. If you got in here, you had the ability to manage out. Does that help a little bit? Awesome. And then you have people like John Novak that'll say, I'm going to read my charts. And if I have enough advantages, I'll take it. So Paul, 50-50, right? You get in at the top spot, and then you closed out because you saw the reversal bar with divergence from 1-to-1s, and that was crude oil. And then what happened in crude oil on that 50-50? Never changed direction, did it, Paul? That's a good one. That's a good one. And then John Novak says that he traded in determination conditions. Did you hear him? He said that he traded in determination conditions. Holy smokes. And he did it because of the range charts. And Paul, that reversal bar is not from those outer bands, right? It's just giving you that push up to strong triggers, to strong triggers, to strong triggers. And then divergence on the high helps push things down. You don't need those, Thala. Not yet. Yeah, John and I were talking about that yesterday, Paul. We were watching the S&P and we're like, oh, look, reversal bar from the outer band. Let's see what happens. And it almost always creates a deeper push. This one's kind of, not so much. And it just pushes right back to those strong triggers that lines up with the perfect entry. It's a good read. And that's exactly how it happens, guys. You'll see everything. Thala, you don't need them yet. Alan, you are putting on a clinic, my friend. Odds favorable, 50-50. You identify it as medium probability. Great entries. Create manageable trades. You had $300 in the bank before it ever hit the trouble spot. Great trade, Alan. And eventually you'll add another contract, right? And you'll let that next one run with all that momentum. And then John did a replay video for when all the charts agree. That's a good one. NT7, Gary. File, flatten everything. I don't have 8 up. John, can you show a picture of the flatten everything on 8? I think you can right click in your chart trader and there's an option for flatten everything. And John said there were 2 good ones today where everything agrees. There's one where every chart agrees and the result is outstanding. Guys, this is when it's effortless. When everything is giving you the exact same look. Everything says down. Every trigger's down. Every area is down. You're on the right side of everything. What is best for you? Gary, I believe that there's Rhythmic Trader for Apex to be able to close out of positions if you're in them. I'm not 100% sure. I had that happen once and I had to shut down 8 and reopen it and I was good. And then John is exactly right, guys. We teach it, but you have to play around figuring out what's best for you. I'm going to give you a foundation you can grow from. And then from that foundation, you're going to find your comfort levels. You're going to figure out what makes you happy, what makes you nervous. You're going to figure out whether or not you like to hold for longer moves or if you prefer to get out with quick profits. You're going to understand if termination conditions just don't make you feel good, or if you're willing to, if your charts say. But the cool thing is, if you post everything that you do in class, guys, I'll give you feedback. I'll tell you what I see. I've been reading these indicators for a while. Michelle, you used it during that last great crude trade when your NT8 crashed. You went to Apex and shut it down? Right on. They even tell you in Apex, they say keep Rhythmic open just in case. Keep it open just in case so you can close the trade. Pretty sure that's in the instructions, but I have a grill out back that has extra parts. Lots of months. And everybody's different, right? Thank you for that, Michelle. Everybody's different. Everybody learns at a different rate. I know, right? They pack in so many extra parts. When I was in mechanics school, there was a guy that put together a motor. We had to be able to put together a motor. It was a test. And when he put it together, he still had like 3 or 4 parts on the bench. He didn't pass that test. Guys, we're just waiting, right? A little bit of a holding pattern. Gary? Perfect entry, money, money. Using support. Gary, what a great trade. Nice job. Guys, it feels good when it's effortless, doesn't it? And then John is going to take that market flow signal from the outer band going down to catch the rest of it. Overall, that's a good day, Gary. Nice, Luciano. I had one today. It is. It's growing pains. And then John says take advantage of the ability to use a simulator. That seems like a good idea. Practice without the threat of loss of capital. Make sure that you can go through the mechanics. And guys, it's not just the mechanics of taking a trade. It's the mechanics of getting into a trade. It's the mechanics of getting out of a trade. Whoops, what did I just do? It's the mechanics of moving your stops. It's the mechanics of setting up an ATM strategy. It's the mechanics of scrolling your charts, right? Make sure that rifle works before you take it to battle, guys. Make sure you know how to work it. And we're coming up on noon. What do you guys think? How are my new people doing? I got 50 people in the audience. New guys, talk to me. Demos, how are you feeling? I'm looking through. Thala, making progress every day. Shogun, how you feeling? I'm going through the names right now. Joel, making improvements every day, right? Alan, putting on lessons for us. Zeba, how was your day? Tony, making strides, following rules. Bobby T, focused on those rules. Claire, you got so quiet. Michelle, always nice to hear from you. I'm looking at my list, guys. About holding patterns. I let the 13-2 lead, Jerry. That's the basis of everything for me. If my 13-2 is strong and there's nothing in the way, I'm willing to hold. If my 13-2 is weak or I smack into something, guys, I know where these areas are long before I get to them. What great profit. Does that help? And it almost seems oversimplified, doesn't it? If I have strong triggers, I hold. When they get weak, I exit. But I think that the key to that statement is remember to let the 13-2 lead the way. Jerry, remember that the 13-2 gives you momentum. Remember that the 13-2 is giving you those termination conditions. The only thing the 5-1 is an entry. So if I take this entry right here, oh, okay. Well, I hope you're having great travels, Claire. Jerry, if I have this great entry right here, my 13-2 doesn't hit an area until 28, all the way down here. Isn't this trigger look a great reason to make that 32 ticks? Does that make sense? Yeah. And it takes a while because what happens is we enter on the 5-1. A lot of people will enter on the 5-1 and then they'll hyper focus. Who enters a trade and watches that black number like they're getting paid to do it? Who enters a trade and watches their P&L fluctuate? Rather than remembering why you got into the trade. Why did I get into this short trade? Because of momentum, because of a clear path. Don't let fluctuations on the 5-1 scare you out of the perfect trade. Have a reason to move your stops. Have a reason to move your targets. Have a reason to adjust during the trade. And what you'll find is that those bigger moves become easier and easier. So, Jerry, if you were holding all the way down to support, 3 divergences right at support manage you out of this trade, right? But the 13-2 said, don't let go until we smack into that blue line. And then, of course, straight from the instructions, how about trade entry, exit management techniques? This video was absolutely useless to me. in my first month, but once I started getting those entries and understanding how great entries create manageable trades, I went back and watched this video 3 or 4 times, and I found it to be helpful. There's no doubt in my mind you'll find it to be helpful, guys. John Novak has spent 25 years watching people work their way through the education process, and I really believe that there's something for everybody. As long as you use your voice and ask, we have answers. If you want to get rich quick, play the lotto. If you want to be paid forever, learn to trade no matter how long it takes you to get good. Amen. And with that word of wisdom, guys, I'm going to call it a day. It is. So, Jerry, do you have to hold a trade for a long time? And I think this brings up a good point. You don't have to, if that's not your style, then don't. Take quick profits and wait for the next trade. But have a reason to get in and have a reason to get out, whether it's predetermined or not. John Novak and I have very different management plans. But the one thing that we agree on every time is making sure that the conditions are correct for entry, and then we'll manage a trade differently. And that's okay. He has his style, and I have my style. And Jerry, my style was hating to hold for long moves initially because I wanted to get in, I wanted to get out, I wanted to get paid. And then ultimately, and this is what John's laughing at, I took this trade yesterday, and my 13-2 said, don't let go. Everything says up. And sure enough, it went all the way up, and I got an 8-point target rather than a 4-point target, which I usually do. High probability on 13 with stop lose at the top. Stop loss at the top. Are you talking about S&P? Right here, Jerry? Isn't that a termination condition? So is it a high probability trade? How easy is that? Shogun, that trade was yesterday. Maybe almost 4 Eastern, somewhere in that area. But Jerry, right now, we don't know if this area is going to break or hold, right? So it's not high probability yet. If the small triggers break above and the large don't, then we can look for a medium probability. Because this is what your S&P has done all day long. Then it's a 50-50 if the smalls break above. Guys, the S&P has absolutely demanded that you be patient today. Rules-based traders found 1, maybe 2 trades, and they made money on both of them, even with small targets. So focus on the rules. Know when it's okay to trade. Study them every day so it's simple. Guys, I'll give you a parting gift here. I'm going to give you my spreadsheet one more time on the way out, just in case people have come back because it slowed down. Guys, my spreadsheet has over 120 pictures of high probability trend trade. Shogun, there's the stock market closes at 3:15 Central. I don't trade the S&P when the stock market's closed because I need something to move it. I need volume. There's open times, there's close times. I don't think it's, I mean, there's probably a market you could find at any time of the day. But with a good plan and good management, I think you can make everything you need between 9 a.m. Eastern and noon. Most people do. Why would you want to trade 24/7, guys? There's golf courses out there. There's golf courses. That's it for me today. Thank you so much, everybody, for being here. Thank you for all the great questions. Thank you for the posts. And guys, remember the chart. This room's for everybody. So ask your question. It's the same as getting a private session. And then we'll be back tomorrow. Snow in Canada, no golf for now. I'm in the Pacific Northwest, Shogun. It is rainy, nasty, horrible. My clubs are lonely in the garage. I will see you guys in the morning. And we're going to do it all over again, guys. Thank you for being here today. I will see you tomorrow.